Preparing for FP&A Analyst at BT interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A contribute to a business like BT? FP&A helps BT translate strategy into measurable financial outcomes. I would support budgets, rolling forecasts, variance analysis, and management reporting while partnering with commercial, network, and operational teams. In telecommunications, the role also means understanding drivers such as customer volumes, broadband pricing, churn, network investment, and energy costs. My objective would be to explain what changed, why it changed, and what management can do next, rather than simply reporting historical numbers. While answering, focus on planning, forecasting, performance analysis, business partnering, and decision support. Explain how FP&A connects operational drivers such as customers, network investment, pricing, and workforce costs to financial outcomes. Question 2. How would you build an annual budget for a BT business unit? I would begin by reviewing actual performance, the latest forecast, strategic targets, and key operational assumptions. For BT, I would model revenue by customers, products, volumes, pricing, and churn, then build costs by headcount, suppliers, network activity, and other drivers. I would meet budget owners to challenge assumptions, reconcile their submissions to central guidance, run sensitivity analysis, and document key judgments. Finally, I would consolidate the plan, explain movements, and secure management approval. Make sure to cover the budgeting timetable, historical analysis, operational assumptions, stakeholder input, revenue and cost drivers, challenge processes, consolidation, and approval. Mention documenting assumptions and ensuring the budget aligns with BT's strategic priorities. Question 3. How do you approach a monthly forecast? A monthly forecast should be a forward-looking view, not a mechanical rollover. I would load the latest actuals, update operational drivers, speak with budget owners, and assess known commitments, risks, and opportunities. I would compare the outlook with budget and prior forecast, investigate material movements, and quantify confidence around assumptions. For BT, changes in customer demand, pricing, project timing, supplier costs, or network deployment could materially affect the forecast, so I would highlight those explicitly. In your answer, talk about starting with the latest actuals, refreshing key drivers, engaging owners, identifying risks and opportunities, comparing against plan, and communicating a clear outlook with actions rather than merely updating spreadsheets. Question 4. Tell me about a time you investigated a significant variance. In one reporting cycle, expenses were materially above budget. I first split the variance by cost center, supplier, and month, then identified that timing and an incorrect accrual were the main causes rather than underlying overspend. I confirmed the position with procurement and the budget owner, corrected the accrual, and updated the forecast. I also introduced a monthly purchase order review, which improved forecast accuracy and gave management earlier visibility of genuine cost pressures. Be sure to mention the size and nature of the variance, how you isolated the root cause, the stakeholders consulted, the evidence used, the corrective action, and the measurable result. Use a concise star structure. Question 5. Which KPIs would you monitor in BT's consumer business? I would monitor customer additions, churn, average revenue per user, product mix, broadband and mobile penetration, and service indicators alongside revenue, EBITDA, operating costs, and cash flow. The important point is connecting metrics. Higher gross additions may not create value if acquisition costs or churn rise. I would compare actual KPIs with plan, investigate driver changes, and translate them into financial impacts. That linkage helps management decide where pricing, investment, or retention actions are needed. Focus on financial and operational measures together, including broadband and mobile customer additions, churn, ARPU, revenue, EBITDA, acquisition costs, service performance, and cash conversion. Explain how KPIs connect to forecasts and strategic decisions. Question 6. How would you forecast telecommunications revenue? I would use a driver-based model rather than applying a simple growth percentage. Revenue could be forecast from opening customers, gross additions, churn, average customers, ARPU, product mix, price increases, promotions, and contract timing. I would incorporate seasonality and separate recurring service revenue from equipment or one-off items. After building the operational view, I would reconcile it to accounting data, compare assumptions with commercial teams, and test sensitivities around churn, pricing, and volumes. Make sure to cover volume, customer base, churn, pricing, product mix, promotions, contract timing, and seasonality. Explain how you would reconcile the driver-based model to the general ledger and validate assumptions with commercial teams. Question 7. What is the difference between a budget, forecast, and actual result? The budget is the approved financial plan for a defined period, usually based on strategic and operating assumptions set before the year begins. The forecast is the latest estimate of what will happen, incorporating new information and changing conditions. Actuals are the results recorded in the accounting system. Comparing actuals with budget measures performance against commitment, while comparing actuals with forecast tests prediction quality. Together, these views support accountability and timely corrective action. In your answer, distinguish the approved financial plan, the latest estimate, and recorded performance. Explain how FP&A uses variances between each measure to assess accountability, changing expectations, and the need for management action. Question 8. How would you explain a forecast miss to a senior stakeholder? I would lead with the headline, "The forecast is below plan by a quantified amount," then separate the movement into operational, timing, and one-off factors. I would explain the evidence behind each driver, distinguish controllable from external issues, and state whether the variance is temporary or structural. I would then present mitigation actions, the revised outlook, and any decision required. Senior stakeholders generally need a clear message, not a long list of unexplained spreadsheet movements. While answering, focus on being concise, factual, and forward-looking. Cover the headline impact, root causes, controllable versus uncontrollable factors, confidence level, mitigation actions, and whether the forecast or assumptions need to change. Question 9. How would you assess whether a cost is controllable? I would assess controllability by considering who can influence the cost, when that influence can occur, and whether a contractual or regulatory commitment exists. Headcount already under contract may be fixed in the short term but manageable longer term. Usage-based supplier costs are more variable, while allocations may not be controllable by the receiving team. This distinction matters because performance discussions should hold managers accountable only for costs they can reasonably influence. Be sure to mention the distinction between fixed, variable, committed, discretionary, and allocated costs. Explain why controllability depends on the manager's authority, timing, contractual commitments, and the relevant reporting period. Question 10. How would you evaluate a proposed network investment at BT? I would evaluate the investment through both strategic and financial lenses. I would quantify capital expenditure, incremental operating costs or savings, customer additions, churn benefits, pricing effects, capacity benefits, and timing. Then I would calculate NPV, IRR, and payback using an appropriate discount rate, while testing downside cases such as slower adoption or cost overruns. I would also assess regulatory and delivery risks. After approval, I would compare actual benefits and spending with the original business case. In your answer, cover strategic rationale, customer and revenue benefits, capital expenditure, operating savings, timing, risks, NPV, IRR, payback, scenario analysis, and post-investment review. Link the analysis to capacity, coverage, and service quality. Question 11. What is working capital, and why does it matter to FP&A? Working capital reflects the cash tied up in operating balances, commonly receivables, payables, inventory, and accruals. It matters because profitable growth can still create cash pressure if collections slow or supplier payments accelerate. In FP&A, I would forecast balances using operational drivers such as billing, collection rates, payment terms, handset inventory, and project activity. I would analyze movements against plan, identify working capital risks, and work with commercial and procurement teams on practical cash actions. Focus on receivables, payables, inventory, accruals, and cash conversion. Explain how working capital affects liquidity, cash flow forecasting, financing needs, and management actions, particularly in a large telecom business with substantial supplier and customer balances. Question 12. How would you improve the accuracy of a financial model? I would improve accuracy by separating inputs, calculations, outputs, and assumptions clearly. I would validate source data, use driver-based logic, reconcile outputs to the general ledger or approved targets, and include checks for missing data, sign errors, and balance breaks. I would test sensitivities and review formulas independently before release. Strong documentation, version control, and a consistent naming convention are also essential, because a reliable model must be understandable and maintainable by the wider finance team. Make sure to cover clear structure, source data validation, driver-based assumptions, formula controls, reconciliations, sensitivity testing, version control, documentation, and review. Mention designing the model so another analyst can understand and maintain it. Question 13. How would you manage conflicting deadlines during month-end? I would first list deliverables by deadline, materiality, dependency, and review requirement. I would complete activities affecting other teams early, reserve time for validation, and communicate immediately if assumptions or inputs were late. During month-end, I would use a tracker with clear owners and status, while escalating conflicts with proposed solutions rather than waiting until the deadline. I am comfortable working under pressure, but I would not sacrifice key reconciliations or review controls for speed. In your answer, discuss prioritizing material deliverables, confirming deadlines and dependencies, communicating early, using a task tracker, protecting review time, and escalating genuine conflicts. Emphasize accuracy and control rather than simply working longer hours. Question 14. What controls would you apply to management reporting? I would reconcile reported figures to the general ledger or approved source systems, validate period and entity mappings, and use standard KPI definitions. I would include automated checks for missing data and unexpected movements, maintain controlled versions, and retain evidence of preparer and reviewer sign-off. Material variances should have documented explanations and supporting analysis. Access controls and clear ownership also matter. These measures make reporting dependable for management and provide an audit trail when questions arise. While answering, cover data integrity, reconciliations, access controls, review evidence, variance thresholds, version management, consistent definitions, and sign off. Explain that controls should support reliable decisions and auditability without unnecessarily slowing reporting. Question 15. How would you use Excel or Power BI in an FP&A role? I would use Excel for detailed analysis, scenario modeling, reconciliations, and flexible ad hoc questions, using tools such as SumIfs, XLOOKUP, pivot tables, and structured checks. Power Query can automate repeatable data preparation, while Power BI can present trends, KPIs, and drill downs to stakeholders. Automation reduces manual error in reporting time, but it does not replace judgment. I would still validate source data, understand definitions, and investigate unusual results before sharing conclusions. Be sure to mention practical tools such as pivot tables, XLOOKUP, SumIfs, Power Query, scenario models, dashboards, and data validation. Explain when automation improves efficiency and why outputs still require finance judgment. Question 16. How would you analyze a BT project that is overspending? I would compare actual and committed spend with the approved budget by workstream, supplier, and phase. Then I would determine whether the issue comes from scope change, timing, rate increases, resource overruns, or inaccurate original assumptions. I would update the estimate at completion, quantify the effect on benefits and cash flow, and agree corrective actions with the project manager. If the business case is no longer valid, I would escalate for reapproval rather than conceal the deterioration. Focus on separating committed and incurred costs, identifying scope changes, timing, procurement issues, resource usage, and forecast at completion impacts. Discuss corrective actions, governance, escalation thresholds, and updating the business case where assumptions have changed. Question 17. What is EBITDA, and what limitations does it have? EBITDA measures earnings before interest, tax, depreciation, and amortization, so it highlights operating performance before financing and certain non-cash charges. It is useful for comparing operations and monitoring margins, but it is not cash flow. BT still needs substantial network investment, working capital, lease commitments, taxes, and financing costs, none of which EBITDA fully captures. I would therefore use EBITDA alongside operating cash flow, capital expenditure, free cash flow, and leverage metrics. In your answer, define EBITDA, explain why management uses it, and identify limitations including capital expenditure, working capital, taxes, interest, leases, and accounting comparability. Relate the measure to telecom investment intensity and cash generation. Question 18. How would you perform scenario analysis on a BT forecast? I would identify the assumptions with the greatest uncertainty and financial sensitivity, such as customer growth, churn, ARPU, energy costs, supplier inflation, or project timing. I would build base, upside, and downside cases by changing those drivers consistently, then quantify effects on revenue, EBITDA, cash flow, and capital requirements. I would document the assumptions and explain the actions available in each case. Scenarios should improve preparedness, not create false precision around an uncertain forecast. Make sure to cover selecting key uncertainties, establishing base, upside, and downside cases, changing operational drivers, quantifying financial impacts, documenting assumptions, and communicating probability or management actions without presenting scenarios as precise predictions. Question 19. How would you partner with a non-finance stakeholder who challenges your analysis? I would first understand why the stakeholder disagrees, because the difference may involve timing, definitions, or operational knowledge I have missed. I would walk through the source data and assumptions together, separate factual results from estimates, and test alternative views objectively. If their evidence improves the analysis, I would update it and explain the change. If disagreement remains, I would present both positions, quantify the impact, and involve the appropriate manager to reach a documented decision. While answering, emphasize listening first, clarifying definitions, using shared data, separating facts from assumptions, and maintaining a constructive tone. Explain how you would resolve differences and preserve accountability for the final forecast or recommendation. Question 20. Why do you want to join BT as an FP&A analyst? BT appeals to me because it combines a large, complex operating model with significant transformation and network investment. That creates an environment where FP&A can genuinely influence decisions, from customer economics and cost efficiency to capital allocation. I would bring strong analytical discipline, curiosity about business drivers, and clear communication with non-finance teams. The role would let me develop as a commercial finance partner while contributing to more accurate planning, better performance insight, and sustainable value creation. Be sure to connect BT's scale, transformation agenda, network investment, customer focus, and data-rich environment with your analytical strengths. Explain what you would contribute and how the role fits your long-term finance development. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.